Good Sunday afternoon, everybody. We're going to wait a couple minutes until people come in here. We're going to talk about a few points that I want to make, and then we'll look at the analysis of where we stand. And we're going to look long term as well. And we'll start here in just about 2-3 minutes. And not sure how I'm going to last. I definitely need a nap. I just walked through the door after 9 hours of travel since 5 a.m. So going to get the most important points drilled home. Not going to take too many questions or do too many altcoins. At this point, just going to be focusing on the big three and see how it goes. So eventually I'll upload some footage from Dash Fest over the weekend. They were definitely taking a bunch of film, and I'm sure they'll edit something together. So that'll be interesting to check out. Some of you YouTube people are too crazy, but I have the power to ban you, put you in timeout. It's always entertaining. All right, let's go. So, some points that I want to make. Number one is log charts, and I will use log charts when I'm looking at charts that are exponentially growing. So charts that have gone on crazy runs like the cryptocurrency space, it's worth looking at log because this is the monthly chart. And we're going to start monthly chart on all of the big three here. And that's going to give us perspective because what we need to keep in check is perspective every time. Whenever I'm giving analysis and there's conversation in the chat room about stocks or anything, whether someone's really bullish or really bearish, I'm always trying to play the devil's advocate to a certain degree to point things out in the other direction to keep the perspective in line. So what we have going on with psychology in this space, I'm sure you all see it in social media, Twitter, Facebook, everybody is depressed and everybody is starting to give up on cryptocurrency. And that means we're close to the bottom of before we get a bounce. So in my opinion, we have two kinds of bottoms. The first bottom is the volume climax with the all out fall off a cliff, V-shaped recovery bounce. And the second time of bounce is when we see a second kind of bounce is when we see a slow, drawn out trend that goes higher, low, higher, high. Maybe it's marked by an inverse head and shoulders pattern or something along those lines. That's definitely a different style of bounce, and it means different things psychologically, in my opinion. So for me, I'm looking on this pullback to mark the bottom. I'm looking for a climax because of where we are at psychologically in this market. And it's because people are so, we're getting people talking about, should I be taking my coins off of my hard wallet and selling? And those are the long-term positions. Those are the multiple year holdings that people are now wondering, like, should they be cashing in? So in my opinion, that kind of market facilitates the climax kind of dump. So while there was absolutely a trade to be had today on this bounce that we just saw, there were 4 or 5%. We'll look at that. Absolutely a trade to be had, and a lot of people had a day maker on that trade alone. That's not the bottom in my opinion, and I'll point that out. So let's start with the monthly time frame and the log chart. This is without log. And first thing I want to point out is in the last 3 months of consolidation, we haven't given back the final 2 months of the bull crazy run. The bull crazy run, the low of the candlestick 2 months before the top, was down at 5,511. And we haven't hit that level yet, and we've been consolidating for 3 months. So this is what the chart looks like regular. This is what the chart looks like in log. It is a completely different setup. And this is taking in, the $100 amount or a $500 amount and keeping it all in perspective on where the run is coming from, essentially. So on this pullback, we can see that this is a bull flag. And that doesn't mean we're going to get continuation anytime soon. But the bottom line I just want to point out is we are in very healthy consolidation if you are looking at the history. And this chart only goes back to 2015. So if you're looking back at the last 2.5, 3 years, this is an extremely healthy chart. And in all honesty, this chart, if we were going to form a monthly equilibrium pattern, we could pull back to 2,000 and form a higher low and then bounce to form a lower high somewhere around 6,000. I don't think it's going to get that extreme. That would definitely do a lot psychologically to the market. If we pull back from $2,000 and get back 90%, that's going to definitely leave an impact. So bulls don't want to see that happen, but I just want to keep giving the perspective, and let's do it with all these names real quick. Here's Litecoin. It says, oh man, we pulled back so much. You go to log and you say, wow, that's a really bullish chart. If you show me any of these charts and say, this is a stock chart on the weekly chart, what do you think? I would say that's a crazy bull run and that's really healthy consolidation. ETH, this is what it looks like on log, 2 months to the top, 2 months on the pullback, haven't given it back yet. And we look at the log and it is a healthy chart with higher lows easily still intact. And another thing is volume. And I want to highlight again, when I am looking at volume, and I'm going to pull up another chart right now, when I'm looking at Bitcoin volume or any volume of the big three, I'm looking at Bitfinex or a different exchange. Usually it's Bitfinex, but we cannot trust Coinbase and GDAX volume because of the way that they do their API or the WebSocket, or again, all that's over my head. I don't fully understand it, but I know that it is giving us some misinformation. So we want to be looking on Bitfinex, and here's the monthly time frame, increasing bull volume on the way up, decreasing bear volume on consolidation. And we'll see how the volume ends up this month, but looks like we're going to see an inside bar on the monthly time frame. So just wanted to point that out. Long-term perspective, the entire cryptocurrency space is fine right now, and there's nothing to be worried about in terms of saying crypto's dead. I mean, the more people that say crypto's dead, the more it means we're getting close to a bounce, because we exhaust the market and we run out of sellers, and then we see people buy the dip and we see shorts cover. So let's now zoom in and do our normal routine. Another point I want to make is where we stand right now in the $7,000 range on Bitcoin. It's different psychologically with numbers. So let's say, oh, we only pulled back $300. We have to look at it as a percentage and not as a number, because a $300 pullback at $10,000 was not a big deal. That's a 3% pullback. A $300 pullback in the $7,000 range is about a 4.5% pullback, a 4% pullback. So that is a bit of a significant difference. And the lower we get, the bigger that difference is. So if we're in the $600 range, a $300 pullback is a 5% move. So you might say, oh, well, we've only bounced 3% or $300 on Bitcoin today. Well, that's opportunity when you bounce 4%. You know, if you lock in half of that, that's a sweet day. So zooming in on Bitcoin, let's look at it viewpoint by viewpoint here. I need to make sure my colors are good. So right now, this is the weekly chart. And again, we have our high, the all-time high, the low of the dump, the top of our bounce, and I absolutely expect a higher low to form. And let's just look at this volume right now with what I'm talking about. This is Coinbase volume. And I want to be looking at Coinbase because that's what I'm trading. So those price levels matter to me, but the volume does not. So we have two huge volume candlesticks this week. And I look at Bitfinex, and it's definitely big volume, but it's nowhere near the magnitude bigger than what we've seen the past few weeks, like it's showing here on GDAX. So that's just a perfect example of why we can't trust this volume. So where we stand right now with the daily chart, fairly close to oversold on Bitcoin, the 4-hour time frame fairly close to oversold. We are anticipating a higher low to form compared to 5,873. Best case scenario for the bulls is to form a weekly equilibrium pattern, which would mean a higher low compared to 5,873, a bounce, and then a lower high. Ideally, if the bulls can get up to the mid $9,000 range, that would be a really nice bounce. And then we would look for this weekly equilibrium pattern to break sometime, let's see, it's mid-March. I would say sometime mid to end of April, we'll be looking for this weekly equilibrium pattern to break. So that's where we stand. We are looking for the higher low. That support level is sitting right there. The daily time frame, RSI right now where we stand is 32. So 32 RSI on the daily time frame. It's been a number of bear flags on the way down, and we are looking for that higher low. So we're going to be watching the last bounce attempt. And a couple videos ago, I said, you know, on this bounce, we're going to set a lower high because there's no way we're getting back to 9,890. We were 15% away, and we're still in a clear lower high, lower low pattern. So my point from the other video remains the same. If you want to be cautious and you're not comfortable trading, then you're looking for the trend to change before you're getting in. And again, we are nowhere near changing the trend. Another thing, if you're a newer trader, this 3-4% bounce that we've seen on Bitcoin today, maybe, you know, you're not comfortable enough and nimble enough to be getting in and out on that trade. So again, don't feel like you have to be making that trade. It's fine to stay patient and either wait for the trend change or wait for a climax kind of all-out dump. So here on the daily time frame, if we do begin bouncing, and if that was our bottom, which I don't believe it is, but if it were, anything under 8,600 is a lower high. That's the level that the bulls are going to have to break the daily lower high pattern. And we now have 1, 2, 3 very clear daily lower highs that we're going to be using as resistance levels and as markers or hurdles that the bulls are going to have to get over to begin to change this trend. So zooming in even further, the 4-hour time frame bounced right at 30 at this point. And again, I am skeptical that this is the low. I think we've got at least another leg down. I want that $7,000 climax. The best oversold bounces that we at the Chart Guys have been a part of have been when we are oversold on the 4-hour time frame and when we break a key psychological support level, and that marks the bottom. That break and that stop loss flush, and then bulls getting in on that dip. So where we stand on the 4-hour time frame, just like we're watching on the daily, we have multiple lower highs that we can be keeping an eye on. And it's every bounce attempt. You need to make sure your magnet is sticking to get it right on point here. So we got our lower high, 1, 2, 3, 4 lower highs, very clear on the 4-hour time frame. And again, it's every time the bulls attempt to bounce and they get rejected and see continuation in the bear pattern. And the last top was 7,825. So anything under 7,825 is just another lower high, keeping us in this downtrend. We're going to be watching the exponential resistances, and they've been rejecting the price the last bunch of bounce attempts, and then on down to the hourly. So the hourly exponential resistances, the last 2 bounce attempts, have topped out just under the 26-period exponential moving average. The first one is the 12 period. We've been bouncing around and getting over that, but not the 26 period. Look at this rejection that we are just forming right now with an hourly bearish reversal candlestick rejecting from the 12 period exponential resistance. We didn't even really confirm any bullish reversal candlesticks. So again, the trade opportunity was there. The low was 7,310 and the high was 7,570. That's a $260 move, and that is 3.5%. And even if, you only get a percentage out of that, that's a trade worth locking in. Personally, I didn't make this trade because I was traveling, and this is not the kind of bounce. Again, slow and steady, the 2 different kinds of bounces, either a flush climax or a slow and steady turnaround. And slow and steady in this scenario is not a trade that I'm comfortable being in while I'm on the road and unable to watch. And at some point in the future, I'll be behind a self-driving car with universal Wi-Fi, and that won't be an issue, but not for the time being. So I'm staying cash, and I placed some bids in case we did see another leg down, but I'm holding out overnight, and I'm waiting for the trade to come to me, and I want to be comfortable with that trade, so I'm being extremely patient. And if I make a mistake and I'm wrong and the bottom was hit right now at 7,310 here, and the bulls just do the slow and steady trend change for the next day or two, I'll make some trades when I see clear bull breaks, and I'll get a few percent out of it. But I will definitely leave some on the table by being too patient. But that's my kind of mistake. A mistake that you make and you lose $0 and you have the same amount of money as yesterday, that's the kind of mistake that I would make much rather than, getting in too early and having to get stopped out. So that's where I stand on my game plan. And let's zoom in. So 15-minute time frame. We had our low of the dump, the high of the bounce. How did we know that the bulls had a little bit of momentum on this bounce and we were holding off the bears for now? Essentially a double bottom. It was a lower low, but not by a significant amount. It was a lower low by $5. I consider that a double bottom on a $7,000 instrument. It's a very insignificant percentage. So we had our low, high of the bounce, double bottom, and then the bulls broke it. I would say the clear break was this candlestick. Look at the volume. And again, I have to double check that volume on Bitfinex, but look at the volume on the follow through and the bull break. It's not there. It is not there at all. The first candlestick is there, absolutely. And, if you're fishing and getting your orders filled down here, that's really the only opportunity you had for some decent percentages here. But the lack of any follow through volume, most specifically, the lack of follow through volume right here on this move, when we saw continuation of this bounce, is a big red flag for the bulls. So now we're heading back down. We're looking at support. And it's down here at this double bottom. And you can see on Bitfinex, we do have a higher low. It's not a double bottom, but I'm watching Bitcoin because that's what I'm trading on. And here come the bears right back. So again, if I were in this trade from earlier today, I would only be looking for a short-term trade and I would be locking it in. The only way that I'm going to be looking to hold for a day or two is if we get a climax kind of dump. Otherwise, I'm going to be skeptical of every bounce unless we get that climax. So that's pretty good rundown on Bitcoin. Let's go to the other names. And I'm starting to focus on Ethereum. About a week ago, I said I'm keeping an eye on Ethereum. Now's when I'm starting to focus. And on this bounce, I think I'm going to play Ethereum. And there's a couple reasons for that. So again, there's the monthly time frame on log view. Let's go into the weekly time frame. So weekly is a completely different setup than Bitcoin. And that is because we already have a lower high and a lower low on this dump where we have now continued to follow through with the downtrend. So there is no chance of an equilibrium right now, and we are nowhere near changing this weekly trend back in favor of the bulls. Let's go back to log real quick just to see what it looks like. A little bit of a different perspective, but again, we have consolidated in the past. This is the most significant consolidation we've seen in a long time, since back at the end of 2016. But you look at this chart, and I would not say this weekly chart is giving me any major trend red flags. Let's get rid of all these old lines. But it's down here. This little base of consolidation, this was the equilibrium. Remember we were watching, some of you do, the equilibrium pattern on the weekly time frame that gave us the clear bull break and huge follow through? That is the must-hold support level for me. So that's right there. And again, removing these lines, but it's down here at 275. In my opinion, the long-term weekly uptrend is not in jeopardy on Ethereum unless we break 275. So let's look at volume on ETH USD. Again, just always double checking against Bitfinex to see differences and going to the weekly time frame and seeing what the bear volume looks like. It's increasing bear volume and it's a break of support. There's no doubt that that is definitely not what the bulls want to be seeing, but compared to the bull volume on this leg up where we did see that move up over 1,000, this bear volume is definitely less than that. So again, it's not the ideal scenario for the bulls, but it's not game over in any means. And all these Facebook groups, it's so hard when I see these people struggling with technical analysis and not really understanding it and wanting to show everybody. But a lot of people are letting their emotions run away with them is really what it is. And I was thinking about it on the drive home where it's just like these people who have their money in or have their long-term holdings and aren't touching it and aren't expanding their knowledge by learning technical analysis and studying and putting in the thousands of hours required to get real good at it. They're really just their leaves blowing in the wind, and the wind is the whales and the market sentiment overall and fundamental changes in the market, but they have absolutely no control. And the reason that I am in this game, the trading game, is because I want control of my financial destiny. I want to have financial independence, and I'm not going to have that if I have no control and I'm being blown all over the place by all these market forces. So by staying in cash and being protective and having stop losses and all that, that's when I take control. And that is the goal. You know, the goal is not to make as much money as possible for me. The goal is to stay financially independent and comfortable for the rest of my life. So zooming in on Ethereum, back to Coinbase here. Daily time frame, volume climax, there's absolutely no doubt about it, but I need to double check and confirm. So volume climax is coming today. That doesn't mean it's going to be bottom, and that's because of the correlation to Bitcoin. We always have to double check on what Bitcoin is doing. So even if we had a 15-minute equilibrium pattern on this most recent bounce and Ethereum and Litecoin break bullish, if Bitcoin doesn't break bullish from it, they're going to be limited and not going to see the kind of follow through that we would expect if Bitcoin broke bullish with them. So just a scenario where this is a volume climax, I would be extremely surprised if we saw more volume tomorrow. And we can go back and say, okay, last all-out dump, we're going to have volume. Let's see, we've got 2.5, 3 hours. It's going to be fairly comparable to the last dump climaxes where we saw the bulls follow through and bounce for a couple weeks. Stayed in the downtrend, but that's where the bounces occurred. And we are going to see similar kind of volume to those days. But we could easily see a lack of follow through on the bounce tomorrow if Bitcoin is not done pulling back yet. So we have to keep that in mind. Daily RSI right now is the lowest it's been in a very long time. That RSI is down at 24. If we get that daily RSI down at 20 and in the teens, it's going to be looking really good for an entry for a swing trade. And this daily chart is in a kind of position right now where if someone were to say to me, you know, what if I got to go away for a week, I'm going out into the middle of the woods, I'm going to have no internet, what should I do? I've got a bunch of cash right now. I would say set half of your position, half of your cash into scaling into this move, because I'm that confident that, you know, the daily time frame is going to bounce from these RSI levels and it will set a lower high, but it will be a solid bounce opportunity. So zooming into the 4-hour time frame, and let's just count here how many red days in a row. Ethereum has not seen 2 green days in a row since back in February 26th. So 3 weeks, and we've got 2, 4, 6, 7 red days in a row now. And we're looking at the 4-hour time frame, much more oversold. We got down in the teens and we saw a bounce. And when my decision to be playing Ethereum, sorry, going back to Coinbase here, look at that big upper wick. That tells me that we are not at the bottom. We have a 4-hour inside bar forming. Let's see if Bitcoin does as well. Bitcoin 4-hour inside, actually it's not an inside bar by $5, but psychologically I consider that an inside bar. But it's important to note that our alert system is not going to consider that an inside bar because it's a robot and it's stupid. I'm just kidding. It's actually way smarter than all of us, but it doesn't have the ability to, make that distinction right now that $5 move can essentially be considered a inside bar. So looking at the hourly, there's our lower high. Again, we're picking out all our resistance levels. I want to know where all of our lower highs are because that's how I'm going to recognize if the trend is shifting or not. Look at this previous support level. The low of this little bounce attempt was at 7.5. I'm back to Bitcoin here. Sorry, guys, all over the place. Here we go. Here's Ethereum. So again, marking the lower highs, hourly lower highs, every single one. I want to know where they're at. We just topped out at 505.11, and we're looking at the low of 450. So if we can't form a higher low compared to 450 and then break 505, the bears are going to remain in complete control. Exponential resistance has rejected the last 3 bounce attempts, and it's rejecting this one as well. We're keeping an eye out for the 4-hour MACD crosses, but they're nowhere near happening right now. Another reason why I'm looking for the potential of continuation down. And let's look at the 15-minute, how it played out here. Again, there was a very clear signal for the bulls to get in. If you didn't get in on the initial scale in, there was a day trade quick flip opportunity when we formed our 15-minute higher low, and then we broke to a higher high. Initially, we didn't see follow through. That might have scared some bulls away. But from that bull break of 480, we ran up to 505, so $25 move. And again, if you only captured $10 there, that's a solid trade, and that can be a day maker, absolutely. So now we're watching things tighten up. 4-hour inside bars are going to give us a lot of information overnight. I would not be surprised to see another 4-hour inside bar form. Maybe not here. I'm always flipping back to Bitcoin. You can see while I'm in the middle of this, just comparing what's Bitcoin's range look like, what does the 4-hour for Ethereum look like. We could form multiple 4-hour inside bars in a row, which would have us looking for a break in the middle of tonight, really. And this is the kind of night where I'm going to be waking up every 2 hours to check on things and just see where the setup is at, maybe adjust some orders, and maybe a sleep on the couch kind of night where I'm near my setup. So Ethereum, the reason I'm going to be playing it is, again, those oversold RSI levels that I showed on the daily and 4-hour time frame. 4-hour RSI is still oversold at this point in the mid-20s, but it's also this chart ETH-BTC. Look at this chart on the 4-hour time frame with a collapse down, and the RSI on the 4-hour was down at 12. The daily RSI on this chart is down at 24, and when it was down at the low, it was down in the low 20s. So that's another reason that I am looking here for this bounce to play out. And that's why percentage-wise, Ethereum got a little bit better of a bounce than Bitcoin, and you can see that by the bounce on the ratio of Ethereum to Bitcoin as well. So these are the reasons. Again, I don't think it's going to be a huge difference between Ethereum and Litecoin as to who's going to be the biggest bouncer when we do hit bottom, but it's enough, and I haven't traded Ethereum in 18 days at this point, but it's enough of an oversold condition on this chart as well that I think that could be a little bit of a catalyst to get a little bit of extra momentum, because you have to think psychologically, if we've been pulling back in Ethereum harder for the last 2 weeks compared to the other two names, and it's been weaker for the last 2 weeks, then there's less people left to sell. More people have sold, more people have cut their losses or locked in their profit, and we reach that psychological point where there is more buyers than sellers. And if we've cleared out some of those sellers on the way down, if we've cleared out more of those sellers on the way down than we have on Litecoin, perhaps the bounce is going to be a little bit easier. So let's get to Litecoin now. Litecoin, again, monthly time frame, potential bull flag in the log format here. And we look at the weekly chart, equilibrium, looking for the same thing as Bitcoin. We got our high, low of consolidation, lower high. And it's also important to note that with the whole psychology, again, just reading Facebook groups and Twitter, how everybody's panicking, but it almost seems to me like it's more panic than when we were down lower a month ago. It's almost like people were okay with that dump because we hadn't found a bounce point yet, but now that we bounced and we're saying, oh man, we're going back to those levels again, it seems like that's a little bit more psychologically wearing on people. So we are looking for a higher low compared to 100 psychological on Litecoin on this pullback, and the ideal scenario for the bulls, same as Bitcoin, will be to form a weekly higher low and then a weekly lower high, and to see this range tighten up. Again, I'm looking at the volume, and I'm seeing this as Coinbase, so I'm saying, show me some real information that I can trust. And I'm going on to Bitfinex to see the weekly volume, look at that. So that's a completely different scenario, and I need to get this stuff out of the way. But look at the bounce, the 3-week bounce, more volume easily than this pullback we have right now. Inside bar, bear break on the weekly time frame. That was our daily equilibrium. That was such a clear signal for the bears to enter positions and the bulls to exit positions. But it's the volume that is so misleading on this Coinbase chart. Look at how much more volume it says there was than the bull move up. The bull move up in the middle of it, it's telling me there was 1.2 million. And on this one, it's saying 2.6, over twice as much volume. And you look at this and it's saying 3 million compared to 1.76. It's almost the complete opposite. This one's saying twice as much bull versus bear volume, and Coinbase is saying twice as much bear versus bull. And if you want more information, you can jump into other exchanges and see what they say as well. So let's just do that real quick. Let's get another one to confirm. Let's go to Bitstamp, and we can see that it's more favoring the bull volume versus the bear volume. So again, more of a reason for me to discredit Coinbase and GDAX volume. So Litecoin, weekly, higher low anticipated, daily chart, clear lower highs. We're marking them out so we can see what we need to break for the trend to change. Lower high, lower high. Our last lower high is 172. Any kind of bounce on this daily time frame less than 172 is a lower high and does nothing to change this trend. So the RSI on the daily time frame is down at 32. We're watching for the potential to reach oversold there. Let's see what the daily volume looks like on Bitstamp. Nothing too crazy. And again, no kind of climax. Ethereum right now is giving the only real volume climax kind of move. And let's see, Litecoin shorter term, 4-hour inside bar forming, same as the other names. Hourly exponential resistance. Look at all these rejections. So going back to ever since this bounce topped out and we broke bearish, we had 1, 2, 3, 4, 5, 6 rejections from these exponential resistances. So our new lower high on this bounce attempt is 144.35. Anything under that level keeps the bears in absolute full control. The bulls are going to attempt to form an hourly higher low and then a higher high. And it is possible. I'm not going to say it's not possible, but I'm still very cautious until that happens. And we have to be keeping an eye out for bear flags because we've been seeing bear flags on every time frame. So let's just look at Bitcoin real quick. The daily chart has been giving us bear flags. We look at the 4-hour time frame. Of course, that's going to be giving us bear flags as well. Just more details on those daily bear flags. But even if you go down to the hourly time frame, these are little bear flags. And even the 15-minute. Let's see what the 15-minute looks like. Not as clear. Well, I mean, there they are. There's a little bear flag right there. A little bounce attempt that saw continuation to the downside. So I'm skeptical of bear flags on all time frames on this bounce. So even if the hourly chart does get a little higher low and higher high on Bitcoin, I'm going to have to be cautious of the bear flag. Even if we get a 4-hour, there was a 4-hour bear flag on Bitcoin just a few candlesticks ago. So in that scenario, if you want to say, well, how do I, get into a position where I can be confident and not have to worry about a Bitcoin or a bear flag? Because if I'm worrying about bear flags on every time frame, by the time I'm in the clear on the 4-hour time frame, I've already missed a significant portion of this bounce. And the answer is stop losses every time. So you can make entries on these plays. You just need to protect your position and never assume, okay, this is the bottom. You can say, I think this is the bottom, but you don't know if it's the bottom, just like I don't know if it's the bottom. So you need to protect that trade because it's the risk management that is going to keep you in a position where you can profit from these moves, even if what you think is wrong. There's nothing better than being wrong and still profiting. So here we have a new higher low now on the 15-minute time frame. Depending on how zoomed in you want to be looking at things, 15-minute, we have our higher low and resistance to be watching. So the range right now on Bitcoin, 7,381. Resistance, that was support. Resistance is 7,570. So we're currently in a range of less than $200, and this range will likely break within the next 2.5 hours. So we'll be watching for a break here to indicate what we're going to be looking at heading into tonight. And what am I looking at right now? Again, we don't have a whole lot of information in terms of these trend lines because we only have 2 clear touches, but just something I'd be keeping an eye on. And again, I don't use trend lines often, but just visually, when I look at this pattern, I see the trend lines without drawing them. It's a pattern that, I can just see where the tops would hit and where the bottoms would hit. But if you're not at that point, absolutely draw those trend lines as a visual guide so you can see them. but you could definitely, it's more of a wedge pattern because it's converging. But, if this candlestick had just closed a little bit lower, it would certainly be, more of a bear flag. So little subtle differences, has it more of a wedge than a bear flag, but certainly something that I'm still cautious of and keeping an eye of. And if at this point, if we break 7,381, that is going to shift the odds significantly, leading to increased odds that we are not done and we are going to see lower lows and watch that 7,000 psychological level. So we've had a lot of nice signals here in terms of inside bars. We had multiple 15-minute inside bars break bearish there for another flush down. And again, the 4-hour inside bar is going to give us a lot of information heading into tonight. Certainly something to be keeping an eye on. But all in all, that's where we stand. 15-minute time frame will give you the most details. If you are in a position, you want to be placing a stop loss. And right now, if I were in a position, depending on when the entry was, or if I wanted to ensure that I locked in some profit or not, I would definitely be out as a bull if this level were to break on the 15-minute time frame, because the only support left would be down at the lows after that. And again, continue to watch volume on an exchange other than Coinbase or GDAX to get clues, because we need to see increasing bull volume to have any kind of confidence that this is going to be a slow, drawn out kind of low that's going to bounce a couple days, which again, I don't think that's the case. But if it were, we would have to see increasing volume telling us that the bulls are gaining in some power. Let's hop into the YouTube real quick, and wow, over 1,000. Thanks, everybody. That's a record. I don't have any goat jokes ready. So I'll answer some questions in the YouTube chat and then going to wrap it up. And certainly going to be paying close attention tonight. So I'll point out anything that I see on Twitter, and certainly we'll be covering more in-depth in the chat room. I do not hold long-term Golem. I haven't for months, and definitely disclose anytime I enter or exit those positions. Sure, we'll pick a free course on this live stream if you guys comment on the recorded version, not the current live chat, but the recorded video. We'll pick a free course or two. Death Cross, good question. That article is going around now, so let's put up the Death Cross and hold off on questions now because I'm no longer reading the chat. So let's put up these moving averages and the Death Cross. I'm going to get rid of these EMAs just to clear things up. Right click, insert indicator, moving averages. Then you go into format, inputs. So it's the 50-day and the 200-day moving average. And the reason I don't put a whole lot of weight into this is because these moving averages, the 200-day moving average is so far behind because of how quickly we ran. And it hasn't even happened yet, or maybe it's happened on other exchanges. But what it shows you is a change in trend. So we had a golden cross. Well, it's not even on this chart, but when the 50 crosses the 200 to the upside, and this is an alert that we have on the alert system, a gold cross and a death cross. When you have the 50 cross the 200 on the way up, that's a gold cross. And when you cross it to the downside, it's a death cross. Now, what does this mean? Think about psychologically what's happening for that to happen. The 50-day moving average is a much shorter time window than the 200-day. So if the 50-day moving average is doing something significantly different than the 200-day moving average, that means the trend has changed to a degree. So when they're both going up, we know we're in a bullish uptrend. You know, the 50-day is a little bit more responsive, so it's wavering a little bit more. But when they're going in the same direction, it's an uptrend on all time frames. But when it starts to cross and we start to pull back, this is when we're getting enough days of pullback that it's starting to drag down the 50-day moving average, and the shorter term moving average is reflecting the consolidation. But the 200-day moving average has so much more data factored into it that it is still, it's factoring days at this point. What was 200 days ago? That's 6 months ago. So we're still factoring in days from September, where the price, where were we in September? We were still down in the $3,000 range. So we're not even really, we're starting to level out a little bit on the 200-day, but the most recent pullback, the last 3 months, is not weighing on the moving average like it is on the shorter term. So when these cross, longer term analysts, and people use it as a shift in momentum, saying, okay, we were all bull because we were going in the same direction. And now that we get this bear cross, we are seeing a shift. So the bottom line is this is a move just like the MACD. It's a lagging indicator. For me to look at this and say, oh, we got our bear cross, that means we're consolidating. Well, no, duh, we've been consolidating for 3 months. Everybody's aware we're consolidating. It's not giving us any new information. So the only thing that this would affect, in my opinion, would be the psychology of perhaps traders that value this. I don't value this moving average because, again, it's not telling me any new information. I know we're consolidating. I know the shorter term moving averages are heading down in this consolidation. So I don't put a lot of weight into it. And it definitely is something that people talk about. Really what it is, this is what it is. This is something that people who are not technical analysts and people that know just a little bit of technical analysis, they can get on board with this indicator because it's pretty easy to understand. So I would say that this indicator is used more by fundamental analysts and people that don't use all the indicators and all the signals that we use. And that's why it's being latched onto to a certain degree by the current market. Next question. We can absolutely consolidate the rest of the year. The whole bull, I won't say the whole bull move up, but in the fall and the winter, I definitely started sounding the caution before we were topped out, well before we topped out. But I was saying, this isn't going to last. We are going to consolidate for multiple months. This is not sustainable. And now we're in multiple months of consolidation. Could it be 3 months? Yes, clearly. Could it be 6 months or 9 months? It could. We will have bounces and bullish opportunity along the way. But I'm not going to say Bitcoin can't go to 2,000 because it absolutely can. And, again, I'm not predicting price action. I never do. But in terms of the odds, what is the likelihood of that scenario to happen? I would say at this point, I would put it at a 40% chance. And again, these are numbers that are very rough and just educated guesses from me. A 40% chance that we pull back. Well, even now, just looking at this chart, I would say even less than that. I would say a 35% chance that we pull back to 2,000. Or what are the odds that we are able to hold this low down at, or the weekly chart low down at 5,000 in the 5,000s? I would say that honestly at this point is a 50-50 because we will hold it initially, in my opinion. I'd say that's an 80% chance. But in terms of what's going to play out after we get an equilibrium, I can't say. That's an equilibrium is a 50-50, although I would give a slight favor to the bulls, maybe 51-49, just because of the preceding trend heading into that equilibrium forming. ETH, again, it's possibly the best play. That's where I'm going to be putting my money when I'm ready to be making entries here, because it is beaten up so badly, and because that ETH BTC pairing is beaten up so badly. The only coins that we accumulate long term are what we accept in payments. So course payments or the alert system payments or membership payments. We haven't sold anything of those, and we have a plan of not even on the table for discussion until 2020. So those are our long-term holdings, and I honestly don't even think about them because it's not 2020. Shorts have been having a field day the past couple weeks, obviously, and the exchanges that allow for that, I'm really looking for Kraken to step it up because they got bought out, or not Kraken, sorry, Polo. We need to see Polo step it up, and we need to see this company that spent $400 million on them put a lot of money into the infrastructure, make it the #1 trading platform, and give us the opportunity to short against or with the US dollar so I can short and not have to be locked into Bitcoin once I cover. But once we get, it's coming. That exchange is coming. We are going to have some more clear leaders in the lead exchange, and shorting will be a big factor in that. So on the bull move, when the market started surging and these exchanges saw millions of people joining, nobody cared about shorting because it's only going up. That wasn't a feature. And now that everybody's saying, okay, we want to short, that this is demanding the service, and then it's definitely a lag time until these exchanges can meet these demands, but they will. The market wants to be able to short right now. 2020 is just a round number. There's no significance there. It's just multiple years out, 2 years out. Honestly, I don't trust capital on other exchanges than Coinbase right now, which is why I'm not going on there and shorting. If I did, I would take 10% of the capital I'm using, and at that point, the gains are why bother. I'm not going to put a date on the course content. Honestly, at this point, I'm working on weekends, and I already work every weekend day, so it's pretty much, do I want to give up my weekend life to work on these courses? I'm about to finish up the stocks versus crypto portion of it, but I've got 3 more portions that I want to do, and I will do it as I can, but it's going to be about a month. Someone in the YouTube chat says, so you're saying we're going down to 2,000 Bitcoin? Fidelity does not do Bitcoin futures. I could milk 2 goats at once, one with each hand. I got so good at it. Cut my time down 80%. All right, we're wrapping it up. I'll do Neo real quick, and then we're going to wrap it. We'll do Bitfinex. Daily charts getting crushed. RSI down at 25. When it was down at the low of the day, that RSI was getting close to 20. The 4-hour time frame, not an inside bar. Tons of volume. So bulls are buying this dip significantly. Although this candlestick, look at the volume. So this volume, it looks like a green candlestick, and you might look at that and say, wow, that's huge bull volume. Then you look at the candlestick and say, well, pretty much half of that candlestick could be bear volume because we ran up and then the bears crushed it down and we saw a lot of downside action as well. But if this were the bounce that I was seeing on Bitcoin right now, this would be a more likely scenario, in my opinion, for the bottom to last a couple days, because this is more of a climax and this is more of bull volume following through to give confidence to the bulls for continuation overnight. So we have our low, the high, and we're looking at this higher low now. And again, trying to get over these exponential resistances. We are still forming lower highs on the hourly. Do not lose sight of that. Look at these tops. 58.59, 58.67, 58.64. 3 tops right there. We formed a lower high. Have to break that level. Here it is on the 15-minute. We're watching a 15-minute range just like we are on Bitcoin. But the bounce that we saw was very significant. At this point, 15% from the low to the high. And it's going to have to be a cup and handle type scenario with our left side of resistance, the pullback, the right side unable to break the left side, some healthy consolidation, and then a breakout towards continuation. And we could definitely see a 15-minute equilibrium like we're anticipating on Bitcoin as well. But again, if this were what I was seeing on Bitcoin with the amount of volume down here comparative to previously, I would be a bigger believer that the low of tonight could be in. I absolutely recommend expanding your knowledge base to get into stocks and other things. Yes, I don't trade Forex because I have all the options I need to trade with stocks and crypto. But again, it's all about increasing your opportunity. And if 10 months ago, if I just said, no, I'm sticking with stocks, that's been working for me well, and I don't know much about this cryptocurrency, I'm going to stay away from it, I would have missed out on a very significant opportunity. I want to do an intro to farming video, a really quick video to show you guys how to plant some really easy stuff. I planted garlic 5 months ago. I watered it once, and I'm going to have garlic. I'm going to have garlic scapes in the summer, and I'm going to have garlic in the fall. And the amount of effort that you have to put into growing garlic is so insignificant. Everybody should be growing their own garlic if they have a 3-foot by 3-foot piece of space to do it in. So I definitely want to, that's the seed that I want to plant in terms of, using this little bit of influence to get people into growing some things, because I promise it's a lot of fun. So I appreciate you all tuning in. I hope you have a good rest of your Sunday. I'm going to be doing a talk with, double checking the schedule, but Bitcoin Benny, I believe, doing a talk with Bitcoin Benny this evening. And we'll record that and put that out. See, I got double checking my schedule right now. So that's the case. Bitcoin Benny interview tonight, and then I'm going to try and get another one with Nuggets News tomorrow. So I appreciate you all tuning in, and we will certainly see you tomorrow. Have a good rest of your night. Stay protective if you're in positions. Have your stop out level. Have the level that you would like to take profit. And otherwise, if you are not in a position, there's no harm in remaining patient. We're not seeing huge volume breakouts with the price running away from us. There's no FOMO right now. So thanks again, and remember to do good things.